Torek Farhadi. He is a former economic advisor at the IMF, the World Bank, and the United Nations. Thanks so much for being with us. You know, it's really hard to reconcile statements like that from the IMF with statements from leaders like President Trump, for example, who points specifically to the stock market to say, see, my policies work. They've been a success because markets are healthy. Therefore, so is the economy. Do people understand how really deceptive stock market numbers and those rallies can be?
Andrea, I think a lot of people do understand because the majority are not owning stocks. And especially the majority of the people of the world are not owning stocks. In Europe, assets are mostly in real estate and not stocks. It's just in the United States that people have their retirement in retirement account stocks, and not everyone. This crisis has had a very uneven effect, especially on people who are semi-skilled and with less education. They have lost their job, and they don't have the options of teleworking, etc. as well. So they have lost their income, basically. So this lockdown, which we call now the Great Lockdown, has, because it's the first of its kind since 100 years, has also led to a great recession since the Great Depression. Why is the IMF reviewing its outlook? Their latest outlook dates from April. In April, we didn't know how this would pan out. What we know now is that from 5 jobs lost, only 3 jobs come back immediately. The 2 other jobs will come back in time, perhaps in 1 year, perhaps in 2 years, perhaps longer, because the structure of business also changes with how we are going to function after that.
Right.
The reality is that, yes?
No, I wanted to go back, though, just to this issue of the disconnect itself between the performance of the markets and what the real economy is actually facing. I mean, that's what worries me, because people somehow think, even though you actually say people do understand that markets are deceptive, my personal opinion is that people don't. When it's sold by our leaders and politicians saying, look, stock markets are great, therefore the economy is okay. Those markets are extremely fickle and impulsive. They're essentially the result of these traders speculating and somewhat, gambling. And this could cause, in effect, another crash, could it not?
So the markets are supported by the central banks, especially the Federal Reserve, and to some extent, the European Central Bank have really shown initiatives to support liquidity, which creates also liquidity for investment into stocks, and also to support banks. So no one is worried that banks would suffer out of this crisis, because during the 2007-2009 recession, we learned how to support banks. And now all the programs of the government in the United States are also being channeled through banks. So banks will stand okay initially, unless their loan portfolios suffer. For instance, if they have restaurants and movie theaters and transport companies that they're clients, and in time they cannot pay back the loans, those loans will be losses. And this later in 2021, we will see the type of portfolio losses on banks. But right now, the markets are supported by the liquidity created by the central banks. Okay. The traders also forecast an upside from a vaccine, because this upside is a real upside. If a vaccine comes out tomorrow, then we are saved. We are saved only for what has not been destroyed. There's a lot of jobs have been destroyed. There's a lot of demand that has been destroyed. The people who haven't gone to tourism trips and restaurants in the last 4 months, that will not come back. And those businesses didn't make money, and some businesses are going bankrupt, actually. Right. So at the micro level, it's dangerous. At the macro level, the central banks are here to support the system.
Okay. Those central banks are funded with some public money, though. All right, Torek Farhadi, thank you so much for that. We appreciate it.